Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a couple of trade ideas that I'm looking at this week. So let's jump straight into it, jump straight into the charts. I've got euro dollar here on one-day candlesticks, and I think that there are some very interesting developments happening right now, technically speaking anyway. It looks like we might be getting quite an important breakout happening, or on the verge of happening. You see, I've just drawn up here. We've been in this downtrend since February in euro dollar. Why have we been in the downtrend? Just a quick fundamental overview. It's pretty much like the Fed being more hawkish than the ECB, core inflation in the US being persistently higher than in the eurozone. Yes, inflation in the eurozone is very, very high, but it's more driven by energy, whereas in the US it's more driven by sort of underlying economic strength. You know, the US economy is, even though it's showing signs of slowing now because of all this Fed tightening that we've had, it does seem to be significantly stronger still than the Eurozone economy, which is potentially in recession because of the energy crisis, basically, and the war, Russia's invasion of Ukraine. But anyway, that's pretty much why we've been falling for the entire year. But looks like we could be on the verge of breaking above this long-term downtrend. Um, and over a shorter term time horizon, remember, guys, I did recently talk about this pennant formation that we had formed in the last couple of weeks in euro dollar. Well, we did get an upside break of that. We did manage to get above the 50-day moving average as well. And if we can get above this trend line, we can certainly test parity again, which is an area of resistance which we rejected at the beginning of the month. And if we can get above that, we can potentially even have a run at 102, which is another important area of resistance. What's changed fundamentally to allow this rally? Well, since last Friday, we've had a bit more discussion in markets about a dovish Fed pivot. Basically, we're still expecting another 75 basis point rate hike from the Fed at the beginning of next month. But then potentially they're going to downgrade the pace of their rate hikes to 50 basis points or even slower. So we're finally having a credible conversation about a slightly dovish Fed pivot, which is, we're seeing some dollar long positions paired back upon. You've also got a few Eurozone positive developments as well, like energy prices, gas prices have fallen a lot, which is easing concerns about the energy crisis. As well, you've also got warmer weather in Europe at the start of the cold season, which again easing concerns about a shortage of energy this winter. Basically, that can quickly change though. If things get cold, if concerns return about a lack of gas from Russia and all these other places, that could quickly become a headwind. But at the moment, that's a tailwind. And then you've also got an easing of concerns about the fiscal situation in the UK now that the UK has Rishi Sunak, and that's having a positive crossover effect on the euro as well because the UK economy is important to the eurozone. But it looks like if these positive tailwinds from the US and the European side can continue, then we can get a bit of a rally higher. But, and this is sort of where my trade idea starts coming into play, I don't think we're going to see a sustained turnaround in euro dollar to the upside yet. I think there's still going to be a question of selling rallies because it looks to me as though core inflation in the US is going to remain pretty hot, probably for quite some time. And remember also that the US labor market also still very hot and not really showing any signs of slowing down just yet. And those two factors, in my opinion, should combine to keep the Fed hawkish. And I still think we're going to see interest rates in the US rising to potentially 5%, potentially slightly above 5% next year, which I think should keep the dollar supported. So what I'm doing is waiting now for more attractive levels, potentially 102, potentially if we got even more legs and we can test this key area of resistance, support turned resistance around 103.50. This is an idea. It's not going to come into play this week, guys. I'm being quite patient here. I'm observing this rally. I'm going to observe how the fundamentals evolve. This could be something which we don't really get involved in until mid-November potentially. But just something I'm thinking about. Let's quickly move on because there's a couple of other things I'm thinking about as well. We just talked about positive developments in the UK with Rishi Sunak now as the country's PM, which is allowing, or looks like we're on the verge of breaking above a key sort of balance area, resistance, support turns resistance. If we can get above 115, we've got above the 50-day moving average here. I think the scope is there for a little bit more upside. But much like with euro dollar, I don't see a sustained turnaround in sterling. So if we do get above here, I'm going to be looking at this 117 level and thinking about, as we get closer to it, thinking about whether that's a nice area to add to short positions and maybe target, a retest of 110. And why is that? Well, it's mainly because of the positive dollar story, which I think is still there because of the tight labour market and hot inflation, and the fact that the UK economy still very much in a bit of a hole at the moment. Let's look at a few other asset classes. What about US stocks? They've been gaining because earnings so far have been good. We've got some big earnings coming up this week, like what was the list again? It was like Microsoft, Apple, Amazon, and Google. Yes, some of the four of the biggest, pretty much. And if those come in good, then I think we can get above this 50-day moving average. I think we can get above 3,900, potentially even test 4K. I think for now, though, I've just been talking about the positive dollar story, which I'm still buying into with a hawkish Fed and strong US data, hot inflation. I like this downtrend still. So, if we do get back to testing it in some way, perhaps the 200-day moving average at 4,100, this downtrend, perhaps this level here, an area around here, 4,100, if we were to get pushed that high by a good earnings season, might be another opportunity to add to some short positions. Again, this is something which, we might have to wait until mid-November or even later before we start talking about this trade. But yeah, just something I'm keeping an eye on. Finally, let's finish off quickly with oil. Pretty much I'm saying the same thing that I've been saying for a couple of weeks now with oil. Looks like we're in a bit of a downtrend still. Let me just draw that sort of trend channel up. This is the trend channel that I think we're in. We've stabilized in recent days. We've been moving sideways because the dollar's been weakening, stocks have been strengthening, which are both tailwinds for oil. But then when you look at the data which is being released out of places like China, well, the China data has been mixed, but it's still, China's going slower. Eurozone, UK, US, everything's telling a story of softening. And a lot of people, we've got all these central banks, the Fed, ECB, Bank of England, raising interest rates aggressively. And a lot of people thinking that is eventually going to drag us into a recession in a lot of these key economies. So that is hanging over the demand outlook for oil, and I think that's going to keep us in this downtrend. So much like before when I was talking about selling as we got into the 90s, I still am buying into that idea of selling oil if we were to get a return to the 90s, which would be like around this area. So yeah, that's what I'm thinking about with oil now. But anyway, guys, I hope you enjoyed the video. Hope it was informative, and I'll see you all in the next one.